Hey guys, this is a market update. What is happening for Bitcoin and crypto right now is pivotal. Some of the biggest investors in the world are telling us the cycle is changing. And so we have to listen. I'm going to go through that in this video and what they're saying, how that relates to BTC and crypto, because we are seeing risk come back into the markets. Why is that? And why is that bullish? So right now for BTC, we had this breakout, huge breakout of the kind of bear market, right? The 32 resistance. Everyone knew that that was the breakout zone that you had to achieve, and we have now achieved it, right? So the market is looking forward now and thinking, we have a halving, we have the ETFs, we have the rate cycle peaking in the short term. All of that is good as an environment for BTC. So we've got this pennant playing out, which I'm reading as a bullish sign. I just think we're in that part of the cycle right now, as you can see. So buyers are having to pay up. We're getting this consolidation at higher levels. It's an amazing pattern right here. So Bitcoin may not be done to the upside. Now, there's just so much going on, right? Especially around the world. And so these bits of news, even with that going on, you've seen Bitcoin, finding a bid underneath it. So I'm positive we're in the part of the cycle where we should be doing this as well. And so everything seems to be going to plan for BTC. Now, the risk here is that we are still a little bit early. The cycle, the halving is spring next year, and you usually get the real bull market after the halving. And so we're performing very, very well for this part of the cycle. And so with that, you may get drawdowns that occur as well, because we're kind of outperforming for this part of the recovery phase. So we could go higher, of course, especially with the ETF, right? But there's just so much positive news that's fundamentally bringing flows back in. You can see that here as well. This is Will Clemente. You can see the bear market where we have the futures basis negative. So just negativity in the market, everyone's selling, speculators are taking short positions. That's changed, right? So it's not just this random move to the upside. We are seeing risk come back in. We're seeing the market and traders comfortable actually bidding up BTC. That's why the price is going up, and there's fundamental reasons for that, which I'm going to explain right now. If you are a trader, check out the Bybit deposit bonus in the description. If you trade on there, just click that link. You can make a deposit and trade. You get up to 30K as a deposit and trading bonus. You can check all of the links down in the description. Short term, most of the largest investors in the world, we're talking BlackRock here, actually saying they think short-term interest rates have peaked.
You knew I'd start with this, right, folks? Are rates going to be higher or lower?
I think the Fed is pretty much done. Could they hike another 25 in December? Possibly. But I think short end to intermediate term interest rates have done virtually all they're going to do. Could long end interest rates drift a bit higher? I think so. Listen, I think particularly front to intermediate term interest rates, I think that we've seen most of what we're going to see there.
BlackRock's chief investment officer now telling us that short end rates are around a peak, and the outlook over 6 to 12 months is for them to moderate. Now, why is that? Economic slowdown. We're not talking about massive recession here. We don't know how big it's going to be, right? But everything we know is that if there is a massive crash in the economy, guess what they're going to do? They're going to print money. If there isn't, then that environment of just a slow economy is actually fine for BTC and crypto, right? So let's go through that. You can see that this is the composite PMI. This is in America for October. Composite PMI is 51. 51 is basically flat as an economy. Anything over 50 is growth. Anything under 50 is a contraction. 50 is right about where the Fed wants it, because they've been telling us we need the economy to cool off a bit. What is cool. Now, keep that in mind, because if you're investing, right, I assume you have money to invest, which is why you're investing and you're watching an investing channel, right? So you have money to invest. Where do you want to invest? You need to invest in growth so you can make investment returns, right? But the economy isn't growing. So what's going to outperform? Year-to-date returns, what has outperformed? Remember when everyone was saying, no, it's going to be a new paradigm. Commodities are going to outperform. Value is going to outperform. Wrong, okay? It can't outperform because it doesn't have as much growth. Value investing, all of that, there's no growth in that part of the economy anymore. The assets that outperform are the ones that have higher growth. It's a simple concept. What you can see here, NASDAQ outperforms because they have higher growth. NASDAQ is a collection of tech monopolies that have no competition, that have pricing power, that now have a new technology with AI that can mean more products for them, more profits for them, and the others don't, right? And so it's going to outperform. So where do you want to invest? You want to invest where there's growth that is going to outperform in a slow economy. As we can see here, this is the the bank industry underperforming, hasn't gone anywhere. It's also insolvent as an industry, so it has to get bailed out all of the time. Who wants to own that equity? Absolutely no one. Where can you invest, right? Equal weighted index hasn't gone anywhere. It's struggling. Other than the Nifty 7, the rest of the S&P index continues to languish in a holding pattern. Of course, because the central banks have slowed the economy to make sure that there's no growth. Why would stocks outperform in that environment? How can they? Maybe they can charge a bit more. Maybe they can cut costs. Then you get the recession, slowdown. But then what do central banks do? Eventually after that, they try to support again. So small caps, look here, small caps are now staging a full retest of the October lows. The economy isn't doing well. Okay, stock market isn't doing well. And so that's why these big investment managers think that the interest rate cycle has peaked. So that leads us on to what is going to outperform. BTC took a big drawdown during that cycle. Fair enough. But if it can take a big drawdown when central banks are piling on, raising rates and taking QT, money out of the system, what's going to happen on the flip side when the economy is really slow and potentially inflation isn't high enough? Central banks fear one thing more than inflation, and that is deflation. They have to make sure that the show keeps on the road and you don't get drops in prices. The fiat system would collapse, and that's what they're afraid of. So they're always going to try and keep it running. So Bitcoin, if you're looking for a large asset to invest in, you can see here it's outperforming the other two assets. So if you want to invest in growth, right, then you need to look at something that is actually growing. The S&P 500 has a lot of stocks which are just the economy. They're not going to grow a lot, right? They're going to be no growth, flat growth. They're trying to make sure that their profit margins are supported. They're going to be letting people go. That's not growth. You have the NASDAQ, which has much more growth in it. And then Bitcoin, which just as an asset has more growth than that either. It's not rocket science. The thing that grows actually fundamentally, it has more people using it, is going to outperform in any environment. And so what should we invest in? Look at this. We should invest in things that have growth. Now, every investor obviously has to think about how much risk they're taking. You can see that Bitcoin is wildly more volatile than these other assets. Huge volatility here, right? But that's an opportunity to actually buy when you get these drawdowns, an opportunity that you don't get in the others. So yes, you have lower returns and less volatility in something like the S&P. So less volatility, it's not less risk, less volatility. And if you want more volatility, you have to stomach that volatility. You have to understand it, but you get higher returns if you're investing in an asset that actually has fundamental growth and that more people are using over time, which Bitcoin is, because we're seeing that growth now with the ETF. That's actual growth for Bitcoin. So it's outperforming for a reason. It's not a fluke. It's not luck. We also have this from Raoul Pal as well, who's looking at liquidity and market cycles right here. So we know that Bitcoin is a long duration asset. So it's very volatile and it plays off of, future potential a lot. And so, liquidity cycles are going to have a very volatile effect in its price. Even though the secular trend is extremely clear to the upside, you have these price cycles in between, and it's volatile because it's a long duration, it's a high growth asset. And so what we're seeing here is the liquidity cycles. This is global M2, the money supply around the world. You can see it moves in cycles up and down, and Bitcoin moves with those cycles as well in terms of its price. Now that price cycle is volatile, but each time is a higher low in the secular uptrend. So what we can see is that M2 has inflected to the upside now. We had that huge drawdown, but it now has inflected. We look at global M2 here. So we know that China is printing huge stimulus right now in their economy. They're usually a leading indicator to the rest of the world. Europe is basically in recession right now, and they're screaming on their back, we don't want to raise rates anymore, right? Because they're seeing this growth slowdown. So what are they going to be doing in 6 to 12 months? Well, at least it's going to be a lot easier as an environment, monetary environment, than it is now. You're seeing BlackRock saying rates have peaked in the States, even if they don't come down to zero, just a bit easier. So as a kind of net basis, the market is easier and it's a better market for Bitcoin to exist in terms of its price cycle. So we're seeing that inflection right here. And as you can see, This is Bitcoin NASDAQ over M2, very similar. Tech and growth, things that actually have secular growth that just move in uptrends, are going to have violent price cycles. And as you can see, we're inflecting into a price cycle to the upside right now. So we're not in that bear market anymore. The market has realized it. They're piling into BTC. They're taking more risk. You can feel it. You can see it in the market. So you have to pay attention. So it looks like the market cycle has turned. The broad market cycle seems to be inflecting to the upside again. And so everything is pointing towards the fact that, Bitcoin and crypto prices may rise from here. Now, of course, we have to be cautious all of the time. Something is going to happen. There's going to be some inflation print or unemployment print, and everyone's going to get worried, and there's going to be a 20 to 30% sell-off, as there always is. That's investing. That's hodling over time. Take advantage, in my opinion, of those, because it just seems like we're in an inflection to the upside again. And remember, Bitcoin and crypto has secular growth. So it's going to perform to the upside over time in a general sense. So during those price cycles, when you get the drawdowns, is the time to invest. We're already 100+% off the lows. And, we're going into the halving cycle, and the macro cycle has changed. So there's a lot to be positive about and cautious as ever. If you are a trader, check out the Bybit deposit bonus. Trade with me on Bybit up to 30K. Just make a deposit and trade on there. I'm James, MyZG. Cheers for watching, and I'll see you in the next one.